Hello, this is Frida Liu, and you're watching The Shift Asia. Elsa Pau is founder of FinTech portal BlueOnion, and BlueOnion promotes responsible investing and clarity by exposing asset managers' qualitative and sustainability performances. She advocates for investor protection and drives compelling propositions that benefit real change for the finance community. And Elsa is a finance industry veteran who focuses on sustainable, responsible, and impact investing. Currently serves as investment governor for a few family offices in Asia. She's based out of Hong Kong. So nice to be speaking to you, Elsa.
Nice speaking to you, and thank you for having me, Ferda.
All right. You know, when you started BlueOnion, right, what were the gaps in the industry, that make you want to start BlueOnion?
Well, the reason we started was actually quite simple. We were running a lot of the very meticulous due diligence on asset managers. And back then, we had it in the form of an awards, which is a 25-year publication. And the judges started asking me for this very interesting data we collect throughout this process. And we've already started integrating ESG and sustainability as an assessment criteria back in 12 years ago. Wow. So it was very, very advanced. And so they very quickly, they realized that using sustainability as the criteria when selecting asset management products is actually a very helpful angle because it helps prevent some of the black swan events, how a firm is having the capability in preventing some of these risks. Basically, out of, for example, deficiency in governance and deficiency in taking care of their labor or their customers' products, right. And safety. So those things were very interesting angles instead of just looking at the hindsight 1, 3, 5-year, return and risks. So that gave us the opportunity to look at whether or not we can democratize this kind of data and allow all this, the gatekeepers, so primarily the asset owners, the wealth managers at banks and the product due diligence teams, to have this sort of very different and alternative data sets to make their investment decisions for onboarding, for example.
Okay. And I was looking at your website, you talk about some of the greenwashing that happens, right? What is the greenwashing and how does your company aim to counter that?
It actually started with my criminal justice background, and it's got my handprint all over. Okay. So basically, before the word greenwashing even appeared in the industry, we realized that a lot of the investment products, the way that asset managers are marketing their products, or in a way that they represent their investment philosophies, are not exactly how they would be actually doing the due diligence work or the engagements with the issuers that they are purchasing their stocks and debts. So we became very interested in exposing them. Unfortunately, right. They're very close to us, but they do also appreciate the fact that the angles that we're using by looking or drilling down into the constituent companies that they're holding these stocks, whether or not they are lying to the asset managers from the beginning. So without the data, without the transparencies, it's very difficult for the asset managers to engage properly. Okay. Because imagine if you have 300 stocks in your portfolio, you cannot possibly engage with them every week, every month without a foundation. So the data sets would provide them with the very granular, the granular details about across the environment practices, the social practices, the governance, and recently we've just turned the whole ESG angle into simply sustainability, because without financial sustainability, no matter how good an ESG practices you do, it's still not going to be sustainable. Right. So with those information and the granular detail, for example, how the company is compared with their peers in water management. If this company is an EV maker, for example, water is quite material in sort of industry and sectors. So allowing them, and also of course like companies like Tesla, which the owner always complains about how unfair the ESG rating is for the company, but look at all the product recalls, look at all the labor disputes and all the protests that they have over the years. It's understandably, it poses existential risks for the company because those, product safety is key, is material. And also, without the labor force, you don't have a business.
Right.
So that is the kind of angle that we need to look at and help asset managers to see through a company before they sit down and come up with some resolutions over the years.
And basically look at it not three-dimensionally, right? Not just from one aspect, Now, you've built a no-code access experience that allows both non-technical analysts and experts to tap into multiple data sources that are aggregated and structured for a small fraction of industry rates, right? So I've just given you some jargon. What do you mean by that? If I'm a journalist would I be able to comprehend, in what way would I be using this?
Absolutely. That's the beauty of it. Because we realize that the companies that need the most help are not the biggest companies. They are the small and mid-tier asset managers who have very limited resources, and they struggle competing with the talents in the market because this whole sustainability thing just came about in the last couple of years. So everyone is fighting for talents, and without the talents interpreting those data or the taxonomies or the frameworks, and without a sophisticated tech team, you won't be able to ingest all the data and make sense out of them. So what we did was we built a highly, highly intuitive and very easy to visualize sort of database where you can just slide the bars and decide how much fossil fuel you can tolerate in your portfolio, slide the bar and decide whether how much animal testing can you tolerate in your portfolio, so on and so forth. There's over 200 of these. We call it a dim sum sheet, right? You can take and decide what you want to exclude and what you want to include in your portfolio. So not only allowing laymen like yourself, even an intern graduating from college or still in the college, but having the interest in the future of the world, they can also learn. And the logic and the intuitive platform will help small mid-tier firms to really, really save a lot of money and licensing costs.
Right, and you're right. It's not the larger organizations, it's the smaller organizations that don't have the budget or the resources for someone in-house. Now, your BI also enables investment managers, investors to find, see, and analyze their portfolio sustainably structures within seconds and reduce headcount by 70%, right? Now, how is this percentage derived?
So that's basically what our clients have been telling us, but we can work backwards and see why they come up with such figures, because conventionally you would need to buy a couple of these data sets or to get licenses from a couple of these data sets. They range from anywhere from 85 to 100,000 US a year.
Right.
And then you need to hire about 3 people to 4 people on the team to figure out the data and put them into the right compartments and work out a proprietary taxonomy in order for those different data sources to make sense. So if you add those things up, 70% is actually quite a conservative estimate. We have had clients telling us that we've increased their operational efficiency by at least 80%. So it saves thousands of dollars. It saves manpower, and more importantly, it saves a lot of time because everything can be just sorted out within milliseconds. So they don't have to go dig out the 300 companies in their constituent and then try to figure out their carbon emissions and work out the right formula, and then not being able to keep tap of this carbon monitoring over time.
Right. You spoke about this, but the Sustainable Finance Disclosure Regulation Module Analytics disseminates the shades of green and allows for insight into selecting funds which deliver impact as well as ensuring compliance with objectives, ironing out greenwashing risks. So you were just saying that, whether it's no animal testing and what have you and all that, how are Asian companies generally faring when it comes to practicing these things?
Well, first of all, the SFDR, the Sustainable Finance Disclosure Regulation, the EU SFDR framework applies to the investment product level. In other words, the shades of greens, there's the light green, there's the green, dark green, and what we call a dark green 50. There are different levels of greenness indicating how much ESG the investment products integrate into the process, as well as looking at the actual impact. So, for example, positive impact is what we're looking for. So, dark green 50 would indicate the company generates green revenues 50% or more. So, the portfolio of companies need to have that sort of combination of the companies they integrate into the portfolio reaching that threshold. Now, Asian companies also are very, they're also favorites for a lot of the European investors.
Okay.
And when it comes across to getting validation at the EU SFDR level, no doubt Asian companies are not that great. They are a little bit behind because I think in general, I think Asia is a little bit behind catching up the sustainability requirements. And the SFDR framework is one of my favorites because it allows you to exclude companies that are doing bad things, but also allows you to support companies that are doing the right things. So you sort of give pressure to the asset managers to integrate companies into the portfolio that are making changes to the world. Now, having said that, we are also going through a transition era. In other words, we can't just expect companies to be completely green overnight. There's a transition, right? So for diesel vehicles to turn into EV vehicles, and there are many opportunities also along the line, such as chargers, batteries, etc. So it's a chain of economy that are participating in this sort of transition. And Asian companies have their pros and their cons. They have no legacy, so they can start from scratch. But the problem is there's been a lot of different reporting taxonomies, even within the ASEAN region. So what we would hope for is to have a relatively more standardized taxonomy, which we do. We have an ASEAN taxonomy, where companies can follow these taxonomies and look at their OPEX, how they can mitigate their asset and their OPEX liabilities in the transition, or they can be looking at injecting a little bit more CapEx for the transition to make sure that they don't encounter that much of a cost, like carbon taxes and rising energy costs over the years. So there's still a lot of opportunities for the asset managers to engage with these companies.
Right, and of course we can't do a broad sweep of Asia because Asia is also very different within the different countries. Now, and just from your observation, whether it's globally, right, when it comes to ESG, are there areas we could do better? I'm thinking that it's easier to measure the E, right? Easier to measure. Are we doing enough to improve the S and the G? Right? And can we do a little bit more?
Now, G is a given. It should be industry agnostic. Regardless of which sector you're in, you should be doing the best governance. You have an independent board. You have enough diversity on the board. So environment, no doubt, I think, is the biggest problem because we're actually, there's no dispute. We're very late. Decarbonizing, we're in trouble. So there's been a lot of talks and actions on the E. Like you said, it's easily quantifiable. But by just having our levers just on the E is not going to work either, because some sectors they are a little bit more S focused, right? So as much as you think EV is helping the environment, they're actually very material when it comes to social. So like the example I gave earlier, product safety is a social issue.
Yeah.
Affordability is a social issue. Labor safety and working conditions, they're all social issues. So some sectors are very social factors vulnerable. So those sectors should pay a little bit more attention to the S. Whereas, like hospitality, we don't think data privacy is material, but yes, we did have a hotel chain that went into a merger and millions of data was leaked. Wow. So these are all social issues that we need to pay attention to. But environment, yes, in general, we do have a lot of problems to fix. And then I'm seeing a lot of investments going into that. But social is more of what the company should be working towards. It's not just capex or investments can fix overnight.
People, planet, profit, right? At the end of the day.
Absolutely.
Right.
Yeah. Otherwise, it's not sustainable. We can have all the money in the world, but people are gone. Planet is not here anymore.
So, where is BlueOnion available or working in focusing on at the moment?
So we have 3 pillars that we focus on. One is the application. So we help asset managers to find, actually to engage with the companies, to find the right companies, to assemble the right portfolios, and then overnight, over time to monitor and also to make sure that they're on the right track, doing what they promise that they'll do. And then at the same time, we also have modules that we assist the wealth managers. So typically they're the banks, the private banks and the retail banks with the wealth management arms, selling unit trusts and selling mutual funds, to help them analyze or to monitor the funds that they onboard as green, stay green every day on a daily basis. So at the end of the day, this whole financial ecosystem, all the way from the supply chain, which we have the carbon management modules to help them report their carbon emissions to the listed companies who are using the supply chain, for the asset managers to be buying the stocks of these listed companies, and for the banks to be onboarding these funds. So the entire financial ecosystem, at the end of the day, going to the consumers, that they're buying a safe and healthy fund that is potentially changing the world by excluding the bad stuff and including some proactive impact into the portfolio.
Right. Are you spending any time here in Malaysia?
Yes, I will be there next week. Thanks to the My Digital and the Bursa Malaysia, we are being shortlisted as one of the challenges candidates. And we will be having some discussions with listed companies and see how we can help them with their reporting as well as their carbon management. So a very exciting country.
All right.
We love it.
Look forward to possibly catching up. Thank you, Elsa Pau from BlueOnion, and you've been watching The Shift Asia.